Collective research. Active fundamental research in global capital markets. Make informed decisions.
Gevo is commercializing the next generation of renewable gasoline, jet fuel, and diesel fuel with the potential to achieve zero carbon emissions, addressing the market need of reducing greenhouse gas emissions with sustainable alternatives.
Gevo products. To reduce the environmental impact of aviation, biofuel for jets is a key aspect for the future because it offers an immediate impact on the carbon footprint. Since it is ready to replace petroleum-based jet fuel, it meets or exceeds the standards in ASTM D1655 7566 specification, which specifies blending up to 50%.
The value from these products helps our entire product line cost structure. We get more from every acre of corn than one product or the other. We get the sum total of their impact and draw more carbon dioxide from the atmosphere with regenerative agriculture methods. Lower greenhouse gas emissions and improved human nutrition matter to us and the world.
Gevo generates renewable natural gas, or RNG, by collecting manure from dairy farms. This concept fits in with our philosophy of addition by subtraction. We simultaneously seek to reduce greenhouse gas emissions, GHGs, as we figure out ways to generate usable renewable energy from the process.
Isobutanol. Sometimes known as biobutanol, isobutanol is a building block for many of Gevo's fuel and chemical products, and its creation has been a key breakthrough for many energy-dense liquid hydrocarbons. Ethanol. The market for ethanol is the largest biofuel market in the world, and we can make it in our Luverne, Minnesota, plant. Isobutylene. Gevo's isobutylene is the starting point for many chemicals and can replace the fossil fuel based on which so many rely, with a low carbon intensity that will appeal to a huge portion of the market. Renewable gasoline. Based on a mix of isooctane, isobutanol, and ethanol, depending on the market, this renewable fuel could eventually replace petrofuels and blends. Renewable diesel. As a byproduct of our ethanol-to-jet production process, Gevo's renewable diesel has the potential to reinvent the transportation industry and also has low sulfur content and no particulates.
Sales. Sales have been increasing consistently over the years, with a significant jump from 2020 to 2021 and a slight decrease in 2022. This suggests positive revenue growth. Net income. Net income has been negative for all years, indicating that the company has not been profitable during this period. There is a notable increase in net losses from 2018 to 2019, followed by a decrease in 2020. However, the losses have increased again in 2021 and 2022. Operating income. Similar to net income, operating income has been consistently negative over the years. There is a significant decrease in operating income from 2018 to 2019, followed by a slight recovery in 2020. However, operating losses have increased in 2021 and 2022.
Total assets. Total assets have shown a significant increase over the years, with a substantial jump from 2019 to 2020 and a continued rise in 2021 and 2022. Total liabilities. Total liabilities have also increased over the years, but not as dramatically as total assets. There was a significant increase from 2018 to 2019, followed by a decrease in 2020. However, total liabilities have increased again in 2021 and 2022. Debt-equity ratio. The ratio has fluctuated over the years, with a notable increase in 2019 and a subsequent decrease in 2020. It has remained relatively stable in 2021 and 2022. The decrease in the debt-equity ratio in 2020 suggests a reduction in debt relative to equity, which can be a positive sign for investors.
Quick ratio. The quick ratio has consistently been high over the years, indicating a strong ability to cover short-term obligations without relying on inventory. The sharp increase in 2022 compared to the previous years suggests a significant improvement in the company's short-term liquidity position. Current ratio. Similar to the quick ratio, the current ratio has shown a consistently high value over the years, indicating strong short-term liquidity. The increase in 2022 suggests that the company has more than enough current assets to cover its short-term liabilities.
P/E ratio. The P/E ratio has been negative for all years, indicating negative earnings. This suggests that the company has not generated positive net income during the analyzed period. P/S ratio. The P/S ratio has fluctuated significantly over the years. The sharp increase in 2021 suggests a high valuation relative to sales, while the decrease in 2022 indicates a decline in this ratio. A high P/S ratio may suggest that investors are willing to pay a premium for the company's sales, potentially expecting strong future growth.
Negative row. The negative row suggests that the company is not generating positive returns on equity. This could be driven by a combination of negative net profit margin, low asset turnover, and financial leverage. Net profit margin. The extremely negative net profit margin, minus 346.73%, indicates substantial losses relative to revenue. The company is incurring high costs compared to its revenue. Asset turnover. The low asset turnover, 0.027, indicates that the company is not efficiently using its assets to generate revenue. This could be due to operational inefficiencies. Equity multiplier. The equity multiplier of 1.163 suggests that the company is employing some financial leverage, but it's not exceptionally high. If you would like us to research a stock, please tweet at Collective Rec or leave a comment here.
Like and subscribe for potential investment ideas. Become a member at www.collective-research.com.
Receive investment ideas before they are published.
Collective research. Active fundamental research in global capital markets. Make informed decisions.